What is good, guys? Welcome back to the channel. I hope you're all doing good and having a great day. So in today's video, I'm going to take you guys on a tour of my swing and position stock market trading account. As you guys probably already know if you watch my other videos, I'm quite experienced when it comes to investing in the stock market, but when it comes to trading, it's something I've never really done all that much. So it is something that's quite new to me that I've been trying to pick up over the last few months. So over this time, I've put aside some money into my Trading 212 account to really give it a go and see whether or not I can make a consistent profit and see how the performance compares to my long-term investment portfolio. So in this video, I'll be going through all the most relevant trades that I've taken since funding the account, exactly what my motivation was going into each trade and what potential I saw, and then also see how profitable the account has been over this time period. Now before we get into it, if you are new around here, welcome to the channel. This really is the place to be for all the most relevant information on UK finance. So whether you're interested in finding out what are the best credit cards or bank accounts out there at the moment, as well as content on investing, making and saving money, this really is the place to be. So if you're not already, make sure you hit that subscribe button down below and click that bell so you never miss a video. And I know it is a bit cheeky asking before the video's even started, but I'd really appreciate it if you guys could smash that like button, as it does really help me out with the YouTube algorithm. And it basically just allows YouTube to share these videos to more people that might find them useful or interesting. And as always, just as a quick disclaimer, this is in no way financial advice. I'm simply just outlining information and giving my honest opinions and thoughts. Always make sure to do your own research and due diligence when it comes to your finances. But with all that out of the way, let's get into the video. Okay, so just before we get looking at the details of my account, I just want to quickly run through why I'm actually doing this and diversifying out from just long-term investing. So as most of you probably already know, I've been investing long-term for years now, ever since I was at school, and it's something I really feel quite comfortable with. And I've been able to make consistent returns of at least 20% pretty much every single year since starting. Now personally, I think this is pretty decent performance, especially as a lot of this money is not being particularly actively managed by myself. I simply just buy and hold investments I see value in, and I've been able to outperform relevant indexes to the markets that I've been investing in. Now I think all of this is really encouraging. However, there are so many areas within the stock market where there is money to be made, and I just want to explore as many as I can to be able to see whether or not they work for me. Now to me, something that really appeals about trading is the idea that you cash out of all the positions and you never hold anything for a long period of time. So even if you think that the market's overvalued as a whole, there are still ways that you can make some money out of it. And it means that potentially you could be much less susceptible to wide-scale market crashes like we saw in March 2020, which long-term might seem insignificant, but over that shorter period of time could see your account somewhat wiped out. So over the last few months, I really wanted to challenge myself to try out swing and position trading, just to see basically whether or not I can do it effectively. Now swing and position trades are effectively when you take a short-term position in the stock market with the intention of buying on the dip and selling on the high to fully cash out the position and take away the profit. So the position might be held for days, weeks or even months, but it's not about holding for the long term. So what it really comes down to is just watching the market, looking for patterns and trying to take advantage of the shorter term volatility. Now my overall goal with this account is to simply try and make consistent profit, but ideally I'm aiming for around 50% over the year. But the most important thing for me is to remain consistent, limiting the losses and not getting too greedy. And as I mentioned, I already have a lot of long-term investments, which actually do cross over some of the companies that I've been trading anyway. So this means I can be less anxious about trying to maximise every single trade and leaving money on the table, because essentially I'm already invested in them for the long term anyway. Right, so that now brings us on to what sort of stocks am I actually trading. So typically when you mention trading, people often think of penny stocks, as they have massive volatility, making it possible to make huge returns over a short period of time. But for me, I'm not really interested in that or any pump and dump stocks. Yes, a lot of people do actually make money this way, but for me, I'm more interested in the larger, more stable companies. And the idea is that trading these larger, more stable companies limits the volatility. So realistically, that limits the chances of making huge returns, but equally it should limit the risk of those stocks plummeting very suddenly. And my intention of picking up the skill of trading these higher volume stocks is that the same fundamentals can be applied to many stocks in the future to come. But who knows anymore after seeing what happened recently with GME, AMC, NOK and other stocks like it, with the whole Reddit short squeeze. Now the stocks that I've been trading in this experiment are exclusively US trading companies, so this is why my Trading 212 account's actually valued in dollars, as I find it to just be more cost effective this way. And also as a UK citizen, there's also the added bonus of not having to pay stamp duty when buying US stocks. Whereas if you're buying UK companies, you'd have to pay 0.5% in stamp duty. Okay, so here we are on my Trading 212 account. So let's just first look at exactly how much I topped the account up with to see what kind of money we're playing around with. So you can see from the deposits that I've topped up a total of $4,600 US, and that's basically all the money that I've been comfortable with playing around with, because it's not so much that I'll be getting too emotional when taking each trade, but it's also enough to be able to make a little bit of money. And in reality, the whole point for me is to start small, looking for percentage growth rather than a monetary goal. And if I can consistently make returns, I can simply just scale up the money that I'm trading with to make higher returns. So if we have a look at my portfolio tab, you can see over the last year, you can see when I started trading the account actively. As you can see, half the year, just nothing happened. There was no money in the account and nothing invested. And then I started making a few trades here and there, becoming more active. But this is a little bit limited as it only shows the profit or loss on the active positions that I've got open. So anytime that I actually sell shares for a profit, it comes away from this chart, so you can't actually see it. So to see the overall long-term profit, if you go into the history tab, you can see the total return on the account of cashed out profit is $879 US. So all that money is actual profit that's been cashed out of the positions. So if I didn't have any active positions at the moment, I could actually withdraw all that money into my bank account. But obviously I do have a couple of positions open at the moment. So I've got a couple of shares of Alibaba, 12 Apple shares, and 4 Peloton shares. So let's now look at the exact trades that I actually took and which ones were the profitable ones that have led to the account growth. So over the past few months, you can see that there's been tons of trades and tons of transactions that I've actually been taking. But obviously some of these have been very insignificant in terms of profit, and a lot of them as well have been sold when I've had to cut losses. So one of the first profitable trades that I took was back in October when Apple shares pulled back quite a lot. So I bought in the dip just after it had shown signs of it recovering and basically rode it out to make a little bit of profit. So on this one I only made $29, but from such a small position that's really not too bad. Then through the rest of October I didn't really take any significant trades, but then on November the 9th I sold another position that I had of 8 Apple shares, of equating to around $900, which I cashed out $54 in profit. And that was a similar story where I saw an opportunity for it to recover further and then actually sold out of that position whilst it was uptrending. And then on November the 17th, I sold out my position that I had in Tesla, which was a bit of a mistake really, as I got a bit greedy whilst the stock was uptrending and just never sold basically. So once it started reversing and downtrending again, I sold out, still in a profit, but not as high as it should have been. But that was purely my fault, just letting greed get the better of me. Then I saw towards the end of November and early December an opportunity with Facebook, where it pulled back to a previous low point, so I then bought in and then rode the recovery to a profit of $56. Then on the 18th of December I closed out my position on Netflix where I had 3 shares and managed to make $125 of profit. With this one I bought in just after their earnings report came out, which had a negative effect on the share price. So I actually bought in a little bit too early on this one, but I only went in with 1 share, so as the price continued to drop I could add more to my position, essentially averaging out the price, making it more profitable when it recovered. Then just before Christmas I took a very small position on Tesla and then managed to sell that for a profit of $58 on Christmas Eve. This one probably wasn't the best trade, but it just formed a consistent pattern which I picked up on. Then at the end of December I took a very small position on Plug Power just at the end of the month, as they had some news that came out that negatively affected the share price, so I just bought in at the dip and sold the next day for a profit. This one again was less perfect as it was showing signs of a downtrending pattern, but I still managed to make a profit on it. Then into the new year I took a bit of a bigger position on Lululemon, where I saw it had pulled back to a previous support level, so I just bought in at the dip and then rode it out partially while it recovered, even though it didn't recover as much as I may have expected it to. Then later on throughout January the most significant trades I took were on Twitter, where basically the share price pulled back due to Donald Trump getting banned off the platform. So this one was probably one of my best executed trades, as I bought in at the dip after it had shown signs of it recovering, and with this one I actually managed to buy on the dips and sell on the highs whilst it was recovering, managing to maximise a little bit more profit out of the situation. So you can see I closed out one position at $48 profit, another at $33, another one at $31, one at $85 and another at $28. This now brings us up to February, where I had 2 shares of Shopify, so I actually got a bit eager with this one and didn't manage to buy in at the best time, and it actually dipped just after I bought, so that was a mistake on my part, but it managed to recover further so I could still sell in a profit. So you can see 2 positions here that I sold on February the 2nd, one for $45 profit and another for $38. So I'll just quickly run through the open positions that I still currently got. So this first one with Alibaba, I see it's a little bit overvalued at the moment. I bought in just after they announced earnings that negatively affected the share price, and then it basically recovered the next day, which was good. But I still see that there's a lot of room for recovery over a longer period of time. So I'm just holding a few shares in this one at the moment, and I'll buy more if it continues to uptrend. But equally, if it pulls back again, I'll probably sell. Then we have Apple, which I believe pulled back due to earnings as well, but this one's a bit more straightforward as it pulled back to a previous support level, so I've gone in with a little bit of a larger position as it's still showing signs of an uptrend. And then finally we've got Peloton, which had already pulled back to a previous support level, but then also had earnings come out which negatively affected the share price as well. So I bought in just after the earnings report came out, so hopefully we'll be able to ride this one as it recovers. But equally it's not really showing much sign of an uptrend yet, so I've not gone in with a huge position. Okay, so that basically covers all of the most relevant trades that I've taken over the last few months. So we're sitting at just under $900 in cashed out profit at the moment. So that's about 19% return over just 3 or 4 months, which I don't actually think is too bad considering I'm doing this as a beginner and I've not actually gone in with massive positions into any of these trades. Now honestly, I don't think 3 or 4 months is long enough to tell if I can make a consistent profit trading like this, so I'll keep going and seeing where we get to. But if we can keep going at this speed, hopefully we should be able to make 50% in profit over the year, no problem. Now I just quickly want to touch on that I do think that trading is a little bit like gambling, as you never really know what's going to happen with any trade. It's more about looking for opportunities and understanding the patterns. But equally, even if you think that something might start recovering and uptrending, it doesn't mean it has to. So cutting losses is something that's inevitable when it comes to trading. So in this video I've not really gone over the points where I've had to cut losses, as I just don't think it's very interesting. But obviously you can see from the number of trades that I've taken that a lot of those will have actually been at losses. But to be an effective trader, it's all about limiting the loss. But there we have it, that basically covers everything for today, guys. I really hope you did enjoy it, as it is a little bit different to the kind of videos I usually make, as I am a big advocate for long-term investing. But I thought it might be interesting to give you guys a bit of an insight into see the process of me learning trading for myself as well, starting from scratch and seeing where it goes. I might also do another video in the future going over my long-term investment account, what sort of investments I have and what value I see in them. So if that's something you might be interested in, make sure to let me know in the comments down below. Now if you did make it this far, thank you so much for watching, and if you did enjoy the video or feel like you learned something new in any way, I'd really appreciate it if you could smash that like button, as it really does help me out with the YouTube algorithm, basically allowing YouTube to share these videos to more people that might find them useful or interesting. And as I said, if you are new around here, this really is the place to be for all the most relevant information on UK finance. So whether you want to know about the best bank accounts and credit cards out there at the moment, as well as content on investing, making and saving money, this really is the place to be. So if you're not already, make sure you hit that subscribe button down below and click that bell so you never miss a video. And as always, if you do have any questions, feedback or video suggestions for me, make sure to drop them down below in the comments and I'll make sure to respond to all of you. But with that all being said, take it easy guys and keep saving.